Good day, doctor. My name is Jaspreet, daughter of Jaspal. My matrix number is 283063, and now I'll be explaining regarding the banking structure of Italian bank. Since 1936, the Italian bank industry has been divided into two, which is industrial bank providing short-term and specialized credit establishment, and also providing medium and long-term credit. However, the distinction didn't imply a strict distinction between the long run and the short run money activities. Firstly, the Italian deposited bank might have owned their share that established the sideway finance long disposable activities, and the bank might operate within the medium term through subsidiaries. The second is to permit industrial bank to be a precise extent. Italian incorporate a sizable amount of bank holding firm. The market is undercapitalized. Compared to different European countries, Italian incorporates a sizable amount of little to medium-sized bank in operationally domestically. Italian and FRG has the similar money frameworks. Moreover, the Italian bank are strictly regulated by the government, and every bank should be approved by the Bank of Italy. Since the 1990s, the Italian bank region has a skillful vital consolidation, with the very bank decreasing due to the merger, takeover, the quality transfer, liquidation, and the conservation of a financial organization into the economy company regarding the 60 proportion of general Italian banking properly. Banking in Italy with a foreign exchange capability typically has a correspond in the United States. Foreign exchange transfer and exchange transaction must go through authorized intermediate in the Bank of Italy, where the bigger the Italian bank are typically present to more than one American cities. Bank in Italy with a foreign exchange capability typically has a correspondent into the United States. Foreign currency transfer and exchange transaction must go through an authorized intermediate, which is in the Bank of Italy. The bigger Italian banks are typically presented more than one at American cities. The Bank of Italy is the charge of euro note issuance, as well as credit, financial and market supervision, and the bank merger regulation. According to the European Central Bank (ECB) standard, the governor of the Bank of Italy has 6 years term and can only serve for 2 terms. There are 3 primary factors of driving the evolution of the banking system in Italy, which is there are several small and medium-sized banks in Italy. Next, the Italy has the world's highest rate of private saving. Family would rather retain their money in the bank rather than invest it. And finally, the third one, Italian bank has formed tight working relationship with the Italian companies because Italy has the lack of strong stock market. Business rely on loan to start and to develop their business. There was a moment where Italy faced economic crisis. When companies believe on banking sector to hide capital, the actual economy and financial market becomes closely connected. When the financial crisis strike economy at Italy, Italian banks tend to limit lending to ordinary and also commercial companies. Non-performing loans, which is NPL, has caused significant instability to the Italian financial structure. The IMF has investigated the impact of Italian NPLs to the country's economic development. In principle of non-performing loans, NPLs can have an influence not just to the bank transaction but also to the national economics. A bank's high NPL has 3 consequences, which is they force the bank to prioritize capital consolidation above new credits. Next, they necessitate the bank allocation resources to provisions, hence decreasing the liquidation for the new activity of the bank. And finally, NPL induce misallocation of resources since the bank must deploy cash to cover its NPLs. To summarize the overall banking structure of Italian bank, the Italian authorities and government were indifferent about the limits of Italian bank system. Since its difficulties were uncovered, the Italian banking system has transformed a declaration to the European financial industry.